So Martin Lewis is here now, and he's on a mission to try and save you thousands of pounds on your mortgage. Good morning to you, Martin.
Good morning.
So what is this all about, then? How are we going to save us lots of money?
Well, I think it's important to understand where we are. There's a confluence of three things going on right now. First of all, mortgage rates are at their lowest ever. We've got two-year fixes under 1%. Not everyone can get them, but it's just an example of quite how low rates are. Number two, back in August, we saw UK interest rates being cut from 0.5% to 0.25%. Then it was thought they would probably go lower. But as the economy stabilised, the guidance from the Bank of England is now that's probably not likely to drop much further. So we've got very low mortgage rates and we've got interest rates aren't necessarily going to get any lower. And then the third one, Trump's victory in the US has, because of the very complicated way these things work, made the city's prediction of long-term interest rates go up. Now, fixed rates tend to be based on those gilt or swap yields, swap rates. We don't want to get into the complications, but fixed rates are based on those predictions.
Right.
So the likelihood is, if that feeds through to fixed mortgage rates, we'll start to see fixes, the price fixes are set at, go up. Obviously, if you've got a fix, it's fixed, but the price you get it will start to go up. So we've got mortgage rates at historic lows, UK base rates not likely to get any lower, and fixed rates starting to increase.
Now's the time if you're going to fix.
This could be the bottom of the market. I need to say none of this is guaranteed. Things are very changeable. But if you look at the risk, how much cheaper could it get? Not that much. How much more expensive could it get? No limit. Then for safety, this is a very good time for everyone with an existing mortgage to check, am I on the best deal I can be? If not, can I move?
Well, you need to get accepted first, though, don't you?
Well, look, acceptance is a really important part of it, and that's the big problem. I mean, we've got mortgage rates, as I say, down to 0.99%, but or even 2% if you haven't got, you're borrowing quite a lot of your home's value, 90%. Two big problems. One, your credit score. Is it good enough to be accepted? We talked about that on the show last week. Go and watch last week's slot if you're worried about that, which talks you through it in detail. And number two, these things called affordability checks. Now, this is really frustrating for people remortgaging. So they will check, they will stress test if you could get a mortgage at 7%, even though you're applying for a mortgage at 2%. And now this is quite bonkers in some ways, and I've been campaigning against this because these are new affordability rules. And what we find is some people who are on a 5% mortgage are applying for a 3% mortgage, are tested to see if they could afford a 7% mortgage, told they can't, so they're being told you can't afford a cheaper deal. Well, they've already got a 5% mortgage. It's fine for newcomers. It's ridiculous for people remortgaging. I put a note towards the autumn statement this week that Philip Hammond should change this. I've been lobbying the government to lock people who've had no circumstance change and aren't borrowing anymore into higher rate mortgages because they can't afford cheaper deals is a nonsense. But the most important thing to do before applying for a new mortgage, go frugal. Go frugal for 3 to 6 months before. If you're worried you will fail on your affordability score, stop spending money, get everything down, make the bank statements look cleaner, and hopefully it will help get you through that. And also, brokers. Mortgage brokers have information we don't about the credit score requirements and the affordability requirements of each mortgage company. So speaking to a good whole-of-market broker will be very helpful. Go to unbias.co.uk or vouch for. We'll find a broker in your local area. Some will charge. Or you've got phone-only brokers like London and Country Mortgages who you can call and are fee-free, but you can't go and meet face-to-face and aren't local. You still then do have to check with comparison sites because some brokers will misdirect only deals. So you want to go to whole-of-market comparisons. Just, HSBC tends not to work through brokers in some cases, that type of thing. So you won't get every deal on the market. But if you can't get a deal, talk to a broker because they have knowledge that we don't.
All right.